Welcome back to Talk Tickers, the show where we break down earnings calls and try to figure out what's really going on.
And what it all means for investors.
Exactly. And today, we're diving deep into Dollar Tree's Q3 2024 earnings call.
Yeah, always a fascinating one.
I mean, they've got a lot going on right now with their multi-price rollout and trying to figure out what to do with Family Dollar.
Definitely some big decisions on the horizon.
So today, we're going to try to answer a few key questions.
Okay, shoot.
First off, how is that multi-price strategy actually working out?
Right. Are people actually willing to pay more than $1 at Dollar Tree?
Yeah, and what's the outlook for Family Dollar? Is there any hope for a turnaround there?
And of course, we'll wrap things up with our This Is Not Financial Advices segment.
Where we'll come up with a completely outrageous,
yet somehow plausible,
trade idea based on what we learned today.
I love that part.
So let's jump right in.
All right.
This whole multi-price thing has been a big shift for Dollar Tree, right?
Yeah, it's a pretty radical departure from their traditional fixed price model.
So what did the earnings call tell us about how it's going? Are customers buying it?
Pun intended.
Well, yeah, kind of. But seriously, are people okay with paying more than $1 at Dollar Trees?
It seems like they are, at least in the stores that have been converted to the multi-price format.
Okay, so they're not doing it in every store yet.
No, they're being pretty cautious with the rollout.
Makes sense. They don't want to mess this up.
Yeah, they're really prioritizing execution over speed.
So what kind of results are they seeing in those converted stores?
Well, they said those multi-price 3.0 stores are delivering a comparable store sales increase of 3.3%.
That's pretty solid, especially in this economy.
Right, and that increase is being driven by both higher traffic and a bigger average ticket.
So more people are coming in and they're spending more.
Exactly.
That's a good sign, right?
Definitely encouraging.
But they admitted they're a little behind schedule on the rollout, right?
Yeah, they said they're facing some operational challenges.
Like what?
They didn't get into specifics, but they said they've learned some lessons from the early stages of the rollout and are being extra careful with each conversion.
Okay, so it sounds like they're striking a balance between urgency and making sure they don't screw it up.
That's a good way to put it.
All right, let's shift gears and talk about Family Dollar.
Yeah, that's a whole other can of worms.
They've been struggling for a while now.
And there's a lot of uncertainty about their future.
So what's the latest?
Well, the big news is that they're continuing their strategic review of the banner.
Which means?
They're considering all their options, including a potential sale or spin-off.
So they might get rid of Family Dollar altogether.
It's definitely on the table.
Wow, that's a pretty big deal.
Yeah, they're not messing around.
But while they're figuring all that out, how's the business actually doing?
Well, there were some glimmers of hope in the earnings call.
Really? Like what?
They actually reported a positive comparable store sales increase for discretionary items at Family Dollar.
That's surprising, given how much lower income consumers are being squeezed right now.
It is, but it seems their efforts to adjust pricing and merchandising are starting to pay off.
So they're focusing more on value and essential items?
Exactly.
Smart move. I guess you can't really sell a lot of fancy stuff when people are struggling to put food on the table.
Right. They're recognizing that their customer base is under a lot of pressure.
Okay, so maybe there's a path to a turnaround for Family Dollar?
It's possible, but it's definitely an uphill battle.
But let's not get ahead of ourselves.
Agreed.
What kind of challenges did they highlight on the call?
Well, they're still dealing with supply chain issues.
Like the tornado that hit their Oklahoma distribution center earlier this year.
Yeah, that's still having ripple effects.
Yikes. That's got to be tough.
They're also facing disruptions in the Red Sea and the Panama Canal.
So it's a pretty chaotic environment out there.
Yeah, it's not easy for any retailer right now.
Especially one that relies on imported goods.
Right.
So how are they dealing with all this?
They said they're working closely with their suppliers to mitigate the impact.
Okay, fingers crossed that works.
We'll see.
Anything else they talked about in terms of challenges?
Well, they mentioned that they're seeing some pressure on margins.
From inflation.
Yeah, they're having to absorb some of those higher costs.
And that's eating into their profits.
Exactly.
Not good.
But they're also taking steps to improve efficiency.
Like what?
They talked about streamlining their operations and finding ways to reduce costs.
Okay, so they're not just sitting back and taking it.
No, they're definitely trying to be proactive.
All right, well, it sounds like they've got a lot on their plate.
Yeah, no kidding.
But we've only scratched the surface of this earnings call.
There's so much more to unpack.
So stay tuned for part 2 of this deep dive.
Where we'll delve even deeper into the numbers.
And explore those strategic implications.
And don't forget, we'll be back in part 3 with our This Is Not Financial Advices segment.
Where we'll cook up a trade idea that's sure to make you think.
So stick around.
It's going to be fun. All right, welcome back to Talk Tickers.
Okay, so let's dig a little deeper into some of the specifics from this Dollar Tree earnings call.
Sounds good.
One thing that really stood out to me was the strength they saw in consumables.
Yeah, especially at those multi-price 3.0 stores.
They mentioned a 6.2% comp increase overall for consumables.
But those 3.0 stores were even higher at like 6.6%.
So are people just buying more food at Dollar Tree because they're trying to save money?
I think that's definitely a big part of it.
It makes sense. When you're on a tight budget, you're going to look for the cheapest options.
Right, and Dollar Tree is known for its value proposition.
Did they mention any specific categories within consumables that were doing particularly well?
Yeah, they called out snacks, beverages, and candy.
So even when people are cutting back, they still want their treats.
It seems so.
What about discretionary spending? That's usually where things slow down when the economy is weak.
Right, and that's definitely true for Dollar Tree as well.
They said discretionary comparable store sales were down 1.8% overall, which is pretty much in line with what we're seeing across the broader retail landscape.
People are being more cautious about spending money on things they don't absolutely need.
Exactly.
Do they talk about any specific discretionary categories that were holding up better than others?
They mentioned hardware, electronics, healthcare, and personal care as the strongest performers.
So maybe there's some hope for discretionary spending to pick up as we head into the holiday season.
It's possible, especially if those multi-price offerings continue to resonate with customers.
What about Family Dollar? How do their discretionary spending fare?
Actually, they saw a pretty significant improvement in discretionary comps.
Really? I thought they were struggling.
They are, but they actually reported a positive discretionary comp of 3.7%.
Wow, that's impressive. How did they manage that?
It seems like their efforts to focus on value-oriented discretionary items are paying off.
They mentioned children's apparel, electronics, and hardware as the top performers in that category.
So they're finding ways to appeal to their core customer, even in a tough economic environment.
Did they talk about their store renovation program?
Yeah, they're continuing to make progress there.
How many stores have they renovated so far?
They've completed over 1,500 renovations since the beginning of 2022.
And are they seeing positive results from those renovations?
Yeah, they said they're seeing solid comps in those renovated stores.
What kind of renovations are they doing?
They talked about a couple of different formats they're using.
That's right.
One is called the H2.5 format, which is basically like a Dollar Tree Plus.
What does that mean?
They have more coolers for refrigerated and frozen goods.
Some more grocery options.
Yeah, exactly.
And what's the other format?
It's called the Urban Extra Small Box format.
That sounds interesting.
It's designed for denser urban areas where space is limited.
So they're really tailoring their store formats to specific customer needs and demographics.
That's right.
Smart move.
They also mentioned that S&app benefit reductions are still having a slight impact on sales.
But they expect that to moderate over time.
Yeah, that's what they said.
What about their real estate strategy? Are they still opening new stores?
Yeah, they're on track to open between 600 and 650 new stores this year.
Wow, that's a lot of growth.
The majority of those new stores will be under the Dollar Tree banner.
So they're really betting on that multi-price format.
It seems so.
Did they talk about their supply chain issues?
Yes, they did mention those.
Besides the tornado, what other challenges are they facing?
They talked about disruptions in the Red Sea and Panama Canal.
So global shipping is still a mess.
Yeah, it's creating a lot of volatility and uncertainty.
Did they mention anything about how they're coping with these supply chain issues?
They talked about working closely with their suppliers to find alternative routes and sources.
And are they seeing any improvement?
It's hard to say. The situation is still pretty fluid.
What about shrink? Is that still a problem for them?
They said they've implemented proactive measures to reduce shrink and are seeing year-over-year improvements at both banners.
That's good news, because shrink can really eat into profits. Okay, so we've covered a lot of ground here, but there's still more to come.
Right. We'll be back in part 3 to talk about their financials.
And of course, we'll wrap things up with our This Is Not Financial Advice segment,
where we'll come up with a completely outrageous yet somehow plausible trade idea.
So stay tuned. Welcome back to Talk Tickers. We're wrapping up our deep dive into Dollar Tree's Q3 earnings call.
Time to crunch some numbers.
Exactly. Let's see how those strategic moves and operational challenges are playing out on the bottom line.
Okay, so Dollar Tree reported an adjusted EPS of $1.12 for the quarter.
That's up 16% year over year, right?
Yep, pretty solid beat.
What drove that earnings growth?
Well, we saw improvements on the top line at both banners and some good momentum at Family Dollars, especially with discretionary spending.
Makes sense. So that all helped boost their overall profit?
Right.
Did they break down their operating income and margins for each banner?
Yeah, they did. For Dollar Tree, the adjusted operating income actually decreased by 3%.
Interesting.
But their operating margin improved slightly.
So even though their income was down, they were a bit more profitable on each dollar of sales.
That's the gist of it.
What about Family Dollar? How did their operating income look?
Family Dollar saw a big improvement.
Okay, how big?
They went from an adjusted operating loss of $66 million last year to an adjusted operating income of $10 million this year.
Wow, that's a huge turnaround.
It is. Lower freight costs definitely helped. And lower markdowns and shrink, too. Look like they're getting a handle on those expenses.
So positive signs on the cost side. That's encouraging. What about their balance sheet and cash flow? How's their overall financial health?
Really strong balance sheet. And importantly, no debt.
That's great.
They also generated $786 million in cash flow from operations.
That's a big jump from last year.
Definitely.
What are they planning to do with all that cash? Reinvest? Return to shareholders?
They've been actively buying back stock.
How much?
Year to date, they've repurchased about 3.3 million shares for $404 million.
So rewarding those shareholders. Did they mention anything about their capital allocation strategy going forward?
They said they're committed to investing in the business, both in new store growth and supply chain improvements. But they'll also keep evaluating share repurchase opportunities.
So a good balance between growth and rewarding shareholders.
It suggests they're pretty confident about their future.
Before we move on to the This Is Not Financial Advice segment, let's quickly recap the key takeaways.
Okay, shoot.
It seems like Dollar Tree's multi-price strategy is gaining traction, especially with those strong numbers from converted stores.
Right, and Family Dollar's turnaround efforts are showing some promise, too.
And despite a tough economy, Dollar Tree remains financially strong.
Agreed.
All right, time for the fun part. It's our This Is Not Financial Advice segment.
Always a good time.
We're going to throw out a wild but maybe not totally crazy trade idea based on this earnings call. And remember, this is just hypothetical. Don't base any investment decisions on this.
Definitely not financial advice.
All right, so based on everything we've learned, what's your outrageous but plausible trade?
Well, considering how Dollar Tree is pushing into groceries, I'd say short a basket of packaged food stocks and go long Dollar Tree.
Ooh, that's an interesting pairing. Why those two?
Well, Dollar Tree is really targeting that price-sensitive customer base with their multi-price strategy.
Right, and those are the same people who are likely to cut back on name-brand packaged foods when times are tough.
Exactly. It's a bet that as inflation sticks around, more consumers will turn to Dollar Tree for those grocery staples.
So potentially taking market share away from traditional grocery stores and those big packaged food companies.
It's definitely a bold move, but not entirely out there, given what we saw in the earnings call.
Right, it all comes back to those strong consumable sales numbers. Again, everyone, this is not financial advice. Do your own research and consult with a professional.
Please, this is just us having a little fun with hypotheticals.
Now, here's something to think about as we wrap up. If Dollar Tree keeps succeeding with this grocery push, what other retail sectors could be next?
That's a great question. And it's a reminder that the retail landscape is always changing. Those who can adapt and innovate will come out on top.
Couldn't agree more. Well, that's it for our deep dive into Dollar Tree's Q3 earnings call. Thanks for joining us on Talk Tickers.
And be sure to subscribe for more in-depth analyses of earnings calls, helping you cut through the noise and find those golden nuggets of insight.
Until next time, happy investing.